The next program that we'll be discussing is the SBA Debt Relief for 7A. The 7A program is a diverse tool that is used by financial institutions to reduce their risk while extending vital credit to their customers. We are joined by representatives from Incredible Bank, who are members of WEDA's CRA network. The CRA network works to advance local business projects to meet certain federal regulatory criteria. So I want to thank Incredible Bank for their membership in our organization and also for sharing their expertise with us today on the 7A program. Joining us today are George Lewis and also Todd Carney.
Thank you, Brian. Let me spend a little bit of time here talking about who Incredible Bank is. Incredible Bank is a $1.5 billion bank headquartered in Wausau, Wisconsin. The company has 15 branches throughout Wisconsin and the Upper Peninsula. The company prides ourselves on being America's first online community bank that's servicing customers in all 50 states. Relative to our discussion today, it's important to note that Incredible Bank is the 44th largest SBA lender in the United States. So with that, we'll move on. We can go to the next slide.
I'm working on it.
Okay. Thank you very much. So our charge really today is to talk about how a 7A program can positively impact businesses that have been negatively impacted by COVID-19. The thing to note is that the 7A program is not a single program, and it's an umbrella program that covers a lot of different programs. Each of these programs has their own specific target market, terms, conditions, percentages of guarantee, etc. The list in front of you today gives you a list of all of the sub-programs within 7A. We're going to talk about a couple of them, but it's important to know that there are programs out there for Export Express. You have somebody that's working on a specific contract and needs financing. So you can go to the SBA webpage, pull up information on those programs and get familiar with them. Again, our focus today is going to be on the 7A program traditional, and we'll touch on the cap lines for working capital as well. Next slide, please. This is a slide that George and I decided we'd throw on there in an attempt to get as much information on a single slide as we could. I think we did well. It's really there for you to look at later. It talks about the most popular 7A loans that are used and provide some basic information that you can use just to familiarize yourself. Next slide, please. Our target audience today really is small businesses, not as defined by SBA necessarily, but really 100 employees or less. We're looking for employees, as we talked, that should have applied for EIDL loan programs, as well as the PPP program. We're looking at companies that are not sitting on significant excess capital or collateral. Obviously, those companies have options available to them. The companies we're looking at today in this target includes companies that lack the ability to continue to make debt payments in question, or it's in question, and that need an additional working capital in order to move forward. We're looking for companies that can show a path to recovery. That's going to be an important thing. You heard Wendy talk about the need for putting together financial projections. That's important. And we're looking for companies that typically have an established relationship with a lender. Now is the time to recognize the importance of having a strong relationship with your local community bank that's there with you, not only in the good times, but is also willing to work with you through the down times. Next slide, please. So let's talk about how 7A can come in and help. Specifically, 7A program can be used to refinance existing non-revolving debt to lower a company's monthly payments. More than that, though, you can come in and you can extend the loan maturity date past these troubles that we're going through. No borrower wants to be walking into their bank and have to renew a loan at a low point in their business cycle. So we want to use these programs to extend out maturities date beyond when companies think they'll be back up to 100%. We're looking for methodologies, and the 7A program will allow it to happen, to reduce monthly payment amounts by extending the amortization periods. And as Brian has alluded to earlier and others, if the loan is closed before September 27th, the SBA will make the first 6 months of payments. To put that in a little perspective, it was a $1 million loan for 20 years at 5%. That would be the SBA equivalent of making a $79,000 grant to you during that first 6 months. So it's important to utilize those SBA programs when you can, and to get on them before the September 27th cutoff date. 7A program has flexible terms. You can see it's asset dependent, but you can look at commercial real estate, 25 years, equipment, 15 years, working capital, 5 years. Amortization periods, really they're going to be looking at the useful life of the assets. And as to rates, they can be fixed or variable. They're going to be competitive, and there's no prepayment penalty. So now is not the time to focus too heavily on rates, especially for products without a prepayment penalty. The other side of the coin is collateral. And in this case, the bank and the SBA need to share a priority lien on the collateral that's supporting the 7A loan. Next slide, please. The benefit to the bank of working with their clients, utilizing the 7A program, is that the restructure enhances the likelihood of full repayment. And also, if there is a case where the company can't make full repayment, the SBA guarantee kicks in, and the bank can get a guarantee of up to 85% on loans up to $150,000 and 75% on loans of up to $5 million. Approval timelines vary, of course, based upon the quality of the information coming in, but we're really looking at for SBA preferred lenders somewhere in that 30-day range. And if it's a standard SBA application that's going through a lender that's not a preferred lender, generally that's going to be about 60 days. And we're talking about the time from when you walk in to when you can expect to close and have cash on hand. Of course, those are just estimates. Those times can be much faster depending upon, as alluded to earlier, the quality of the information coming in. Next slide, please. So when we look at working capital needs, which is another critical aspect here, there's a couple methodologies when you're looking at the 7A program. One is to refinance and increase a borrower's existing revolving line, utilizing a new traditional 7A for what we would call a permanent working capital loan. In this case, the amount of the loan would be the amount of the current revolver that the bank has outstanding, plus the amount necessary for the borrowers to get through the troubles ahead. Term can be 5 to 7 years. Collaterals, again, the bank and the SBA will have a first position, typically on accounts receivable and inventory. The rate can again be fixed or floating, no prepayment penalties. And the monthly payments, as alluded to in an earlier slide, if closed prior to September 27th, SBA will make the first 6 months of payments. And again, when we're looking at working capital, typically going to be smaller numbers. So if you're looking at a $200,000 loan, 5 years, 5%, that'd be about a $22,000 grant tied in with this application. That's why it's very advantageous for businesses to be looking at restructuring, utilizing the 7A program. If the company does not currently have a revolving line anywhere, then the borrower can look at, advance the slide, please. The borrower does not currently have a revolving line. They can look at applying for SBA's cap line seasonal program, identifying the COVID season as the season. The difference here really is not that significant. Again, the amount is going to be the amount necessary to get you through to solvency and production and full capacity to repay debt. Maturity, generally what you're going to want to do on these is request a 12-month maturity with an auto convert to a 5-year term loan. So again, you'll have 12 months where you're drawing funds, and then it'll convert to a 5-year term loan. Amortization, you can request up to 10 years. Payments, again, if closed before September 27th, first 6 months are paid. Rate can be fixed or variable. And the collateral is the pledge of all available collateral as it relates to the working capital. Now, the one caveat on the cap seasonal lines is that it does require monthly monitoring by the bank and borrower, and but that's very prudent and appropriate given what the funding is going for. Benefits to the bank, again, similar to the previous slides: increased likelihood of full repayment, 85% guarantee on loans up to $150,000, 75% up to loans of $5 million. Approval timeline, cash in hand, again, 30 days, 60 days. Couple items of note, advance the slide. When we talk about working capital needs and we talk broadly about the amounts necessary to get through the trouble, what are we really talking about? We're talking about a dollar amount that is supported by financial projection that shows borrowers' ability to repay debt with requested term. That's an important aspect of this program, is again the ability to provide those financial projections so the borrower, so that the lender knows how much is really going to be required to get this company through these times. And by financial projections, we're really talking about basic financial projections based upon the last 3 years of tax returns with notes describing some of the key assumptions. Note, we're really talking about no BS, just the P&L. And as George and I will tell you, we've never seen projections that haven't included a little BS, but in this case, we're really talking about no balance sheets are required, just the profit and loss statement. Next slide. As alluded to a little bit earlier, there's two types of SBA lenders. There's preferred lenders, Incredible Bank and about 30 plus other Wisconsin banks are preferred lenders. The benefit of being approved under the SBA's PLP program is that these banks have the authority to approve SBA loans in-house. They do not have to send them off for external approval by SBA. That shortens up the timeline and streamlines the application process. You can find a list of SBA's Wisconsin PLPs on WBA's website, which will be provided at the end of this presentation. And you can also apply through all eligible lenders, which would be all FDIC insured banks. They do not have approval authority, but they can handle and process SBA loans, and that they would have to send off then to SBA for final approval. Again, if you move the slide forward, you'll see where you can find an SBA lender. There's the Wisconsin Bankers Association website. Thank you very much for your time this afternoon, and please stay in touch with your community bank, who will be there to help you get through these times. Thank you very much.